Ladies and gentlemen, good morning. Welcome to the State Council Information Office press conference. Today, we will brief you on national economic performance. We are joined by Mr. Fu Lingui, spokesperson and DG of Comprehensive Statistics of the National Bureau of Statistics. He will tell us about economic performance in the first 2 months of 2025 and then take your questions. Mr. Fu, please. Friends from the media, good morning. Now, I will brief you on the major economic indicators in the first 2 months and then take your questions. In the first 2 months, the national economy was off to a steady start with new and positive development momentum. Under the strong leadership of the CPC Central Committee with Comrade Xi Jinping at its core, all regions and departments strictly implemented the decisions and arrangements made by the CPC Central Committee and the State Council, adhered to the principle of pursuing progress while ensuring stability, fully and faithfully applied the new development philosophy on all fronts, accelerated the creation of a new development paradigm, and took solid steps for high-quality development. Existing and incremental policies continue to take effect. Industrial and service sectors grew quite rapidly. Consumption and investment continued to improve. Employment was generally stable, and new quality productive forces grew and thrived. The national economy got off to a steady start with new and positive development momentum. First, industrial production grew fast, with growth of equipment manufacturing and high-tech manufacturing accelerated. The total value added of industrial enterprises above the designated size grew 5.9% year-on-year, 0.1 percentage points faster than 2024. In terms of sectors, the value added of mining went up 4.3% year-on-year, manufacturing up 6.9%, and production and supply of electricity, heat power, and gas and water up 1.1%. The value added of equipment manufacturing grew 10.6% year-on-year, 2.9 percentage points faster than 2024. The value added of high-tech manufacturing grew 9.1%, 0.2 percentage points faster. By types of ownership, value added of state-holding enterprises was up 3.7% year-on-year, shareholding enterprises up 6.6%, enterprises funded by foreign investors or investors from Hong Kong, Macau, and Taiwan up 3.2%, and private enterprises up 6.7%. In terms of products, production of new energy vehicles, 3D printing devices, and industrial robots grew 47.7%, 30.2%, and 27% year-on-year respectively. In February, total value added of industrial enterprises above the designated scale went up 0.51% month-on-month. In February, the Manufacturing Purchasing Managers Index stood at 50.2%, 1.1 percentage points higher than January. Production of Operation Expectation Index was 54.5%. 2. Service sector witnessed good momentum of growth, and modern services grew rapidly. The index of services production grew 5.6% year-on-year, 0.4 percentage points faster than 2024. Specifically, the index of services production of information transmission software and information technology services, leasing and business services, wholesales and retails, and finance grew 9.3%, 8.8%, 5.6%, and 5.5% year-on-year respectively. In February, Business Activity Index for Services was 50%. Business Activity Expectation Index for Services was 56.9%. Specifically, Business Activity Index for industries like air transport, postal services, telecommunication, broadcast, TV and satellite transmission services, monetary and financial services, and capital market services stayed within the high expansion range of 55% and above. 3. Growth of market sales accelerated, and trade in goods showed good sales. Total retail sales of consumer goods reached over 8,370 billion yuan, up 4% year-on-year, 0.5 percentage points faster than 2024. By area, retail sales of consumer goods in urban areas reached 7,246 billion yuan, up 3.8%, and in rural areas it reached 1,127 billion yuan, up 4.6%. By consumption pattern, retail sales of goods were 7,394 billion yuan, up 3.9%. Income of catering, 979 billion yuan, up 4.3%. Sales of basic living goods and certain upgraded goods enjoyed sound growth. Retail sales of grain, oil, and food and of sports and recreational articles by enterprises above the designated size went up 11.5% and 25% respectively. The effect of trade-in of consumer goods continued to manifest, with the retail sales of communication equipment, cultural and office supplies, furniture, household appliances, and audiovisual equipment by enterprises above the designated size growing 26.2%, 21.8%, 11.7%, and 10.9% respectively. Online retail sales reached 2,276 billion yuan, up 7.3% year-on-year. Online retail sales of physical goods were 1,863 billion yuan, up 5%, accounting for 22.3% of total retail sales of consumer goods. In February, total retail sales of consumer goods grew 0.35% compared with the previous month. In the first 2 months, retail sales of services grew 4.9% year-on-year. 4. Growth of investment in fixed assets picked up, and investment in manufacturing and high-tech industries grew fast. Investment in fixed assets, excluding rural households, reached 5,262 billion yuan, up 4.1% year-on-year, 0.9 percentage points faster than 2024. Investment in fixed assets was up 8.4%, with investment in real estate development deducted. Specifically, investment in infrastructure grew 5.6% year-on-year, in manufacturing up 9%, and in real estate down 9.8%. The floor space of newly built commercial buildings sold was 107.46 million square meters, down 5.1% year-on-year. A decline narrowed by 7.8 percentage points compared with 2024. Total sales of newly built commercial buildings were 1,026 billion yuan, down 2.6%, a decline narrowed by 14.5 percentage points. By industry, investment in primary industry grew 12.2% year-on-year, in secondary industry up 11.4%, and in the tertiary industry up 0.7%. Private investment maintained the same level year-on-year, or increased 6%, with investment in real estate deducted. Investment in high-tech industries grew 9.7% year-on-year, of which investment in information services, e-commerce services, computer and office device manufacturing, aerospace, vehicle, and equipment manufacturing growing 66%, 32%, 32%, 27% respectively. In February, investment in fixed assets excluding rural households grew 0.49% over the previous month. 5. Imports and exports of goods was generally stable, and the trade structure continued to improve. The total value of imports and exports of goods was 6,536 billion yuan, down 1.2% year-on-year. Specifically, exports was 3,882 billion yuan, up 3.4%, and imports was 2,655 billion yuan, down 7.3%. Imports and exports by private businesses went up 2%, accounting for 56.4% of total imports and exports, 1.8 percentage points higher than the same period last year. Exports of mechanical and electrical products up 5.4%, accounting for 60% of total exports. 6. Employment was generally stable, and urban surveyed unemployment rate was steady. The urban surveyed unemployment rate averaged 5.3%. In February, the rate was 5.4%, 0.2 percentage points higher than the previous month. The rate of population with local household registration was 5.6% and non-local 5%, among which non-local agricultural 5.1%. The rate in 31 major cities was 5.2%, and employees of enterprises worked 47 hours per week on average. 7. Consumer price dropped year-on-year, and decline of producer prices for industrial products narrowed. The CPI went down 0.1% year-on-year. Specifically, it grew 0.5% in January and was down 0.7% in February. By commodity category, prices for food, tobacco, and alcohol down 0.7% year-on-year, clothing up 1.1%, housing up 0.1%, articles and services for daily use down 0.9%. Transport and communication down 1.6%. Education, culture, and recreation up 0.6%. Medical services and healthcare up 0.4%. And other articles and services up 5.9%. Among the prices for food, tobacco, and alcohol, fresh vegetables down 5.5%, grain down 1.4%, fresh fruits down 0.6%, and pork up 8.8%. The core CPI, excluding the prices of food and energy, up 0.3% year-on-year. In January and February, CPI was up 0.7% and down 0.2% month-on-month, respectively. In the first 2 months, the producer prices for industrial products down 2.2% year-on-year. In January, it was down 2.3% year-on-year, or down 0.2% month-on-month. In February, it was down 2.2% year-on-year, a decline narrowed by 0.1 percentage points compared with the previous month, or down 0.1% month-on-month. In the first 2 months, the purchasing prices for industrial producers dropped 2.3% year-on-year. Overall, in the first 2 months, with sustained effects of macro policies, the national economy maintained new and positive development momentum, and the quality of development continued to improve. However, we should be aware that the external environment is increasingly complex and severe, and the domestic effective demand is weak. Some businesses face difficulties in production and operation, and the foundation for sustained economic recovery and growth is not strong enough. Going forward, we must follow the guidance of Xi Jinping thought on socialism with Chinese characteristics for a new era, fully implement the spirit of the Central Economic Work Conference and the 2 sessions, adhere to the principle of pursuing progress while ensuring stability, fully and faithfully apply the new development philosophy on all fronts, move faster to create a new development paradigm, and make solid progress in high-quality development. We must implement more proactive and effective macro policies, stimulate domestic demand across the board, further deepen reform and opening up, make every effort to strengthen growth drivers, boost expectations, and promote sustained economic growth. Thank you. Now we open the floor to questions.
Thank you. How do you comment on the economy in the first 2 months? What are the highlights and positive changes? Thank you. Into 2025, with a more proactive fiscal policy and the appropriately accommodative monetary policy being put into place, the adopted and new policies are creating greater synergy. Supplies steadily grew, demand expanded, employment generally stable, new quality productive forces grew, the economy generally stable with progress and a continued momentum of recovery. And if we look at the statistics in the first 2 months, we can see that the economy kicks off steadily with new and good momentum. Kicking off steadily means that the economic recovery in Q4 last year is continued. Despite of deteriorating external influence, the economy remains stable. Production grows. Domestic demand expands. Overall employment is stable. In terms of production, new industrialization is advancing. Macro policies are better coordinated to boost industries. Production grows rapidly. In the first 2 months, the added value of industries above designated size grew by 5.9%, 0.1 percentage point higher than 2024. Among them, added value of equipment manufacturing grew by 10.6% higher than the overall level. It's a pillar supporting production. Digitalization is deepening. The economy was robust in the Spring Festival, driving IT, tourism, transportation, and other services to grow. In the first 2 months, service production index grew by 5.6% year-on-year, 0.4 percentage point higher than 2024. Among them, production indices of information transfer software and IT services, as well as leasing and business service, grew respectively by 9.3% and 8.8%. In demand, the consumer goods trading program has been deepened and expanded. Culture and sports markets during the Spring Festival were active, driving a rebound in sales and higher service consumption. Total retail sales of consumer goods grew by 4% year-on-year, 0.5 percentage higher up. In the Spring Festival, domestic trips grew by 5.9% year-on-year. In the first 2 months, tourism service platforms transaction was up by 20%. During 2024 to 2025 ice and snow season, visitors to national ski resorts increased by 22.8% year-on-year. Chinese animated films broke many box office records. With the policies of livelihood infrastructure building and large-scale renewal of equipment, investment in manufacturing grew fast. Infrastructure investment accelerated, leading to a rebound in investment growth. Fixed asset investment, excluding rural households, grew by year-on-year 4.1%, 0.9 percentage higher up. Among them, infrastructure investment up by 5.6%, 1.2 percentage higher. Manufacturing investment up by 9%. In employment, despite of the Spring Festival, which disrupted the monthly urban surveyed unemployment rate, employment remained stable generally. In the first 2 months, average urban surveyed unemployment rate was 5.3%, essentially unchanged from the same period last year. The economy shows good and new momentum, meaning that the new quality productive forces are growing, macro policies are working, and market expectation and confidence are improving. In terms of new quality productive forces, comprehensive efforts are made to synergize sci-tech innovation and industrial innovation, advance green and low-carbon economy, boosting new drivers of growth in green industries. In the first 2 months, the added value of high-tech manufacturing above designated size grew by 9.1% year-on-year. NEV's yield grew by 47.7%, which is very high. If we look at the outcomes of policies, major and new policies have been more effective to drive production and demand. In the first 2 months, output of excavators, shovels, transport machinery, fridges, washing machines, retails in home appliances, audiovisual equipment, furniture, and cultural and office supplies and communication equipment both grew at double-digit rates. From market expectation, macro policies are more active and effective. AI is breaking new grounds. General Secretary Xi Jinping made an important address at the symposium on private enterprises to greatly shore up confidence in private sector. Manufacturing PMI and non-manufacturing business activity index were respectively 50.2% and 50.4% increase year-on-year, 1.1 percentage higher and 0.2 percentage higher than last month. To sum up, the economy was stable. We have achieved a lot based on deteriorating external environment and against a high baseline, showing great resilience of the economy. But we have to see that the external environment is more complex and grim, with uncertainties and instabilities and weak domestic demands and the difficulties of doing business. So next, we have to follow through the Central Economic Work Conference and the 2-session spirit, put in place more proactive macro policies and expand domestic demand across the board to effectively secure and improve people's lives. Thank you. Next one.
In the report on the work of the government, China's economic growth target is set at around 5%. From the current economic performance, what are the positive and favorable conditions to realize this year's growth target? In proposing the around 5% growth target, we have considered the evolving dynamics both at home and abroad and other relevant factors, and including what is needed and what is possible. From the current economic performance, the coordinated macro policies continue to show its effect. Reform and opening up have been deepened comprehensively. The confidence in the public expectation is enhanced. All this marks a good starting point. From the current condition, there are relatively more favorable conditions to maintain the stable and healthy development. First, we have a solid industrial foundation and a stronger support from the new driving forces. From industry, China has industries across all categories of the United Nations, a complete industrial system and a strong supporting capacity. The size of China's manufacturing industry has been the largest for 15 years. China's Made in China not just meet the domestic needs, but sold worldwide. In recent years, we are committed to innovation-driven development and promoted core tech in key fields and developed new quality productive forces in light of the local conditions. Traditional industries get upgraded, emerging industries developed, and future industries being accelerated. The new driving forces are formed at a faster pace. From the service sector, the integration between the advanced manufacturing and producer service are accelerated. The policies that consider the well-being of the people have been developed, and we have also developed the livelihood service sectors. The impressive emergence of AI have driven the related industries and bringing new opportunities for the upgrading of industries. Second, we have a broad space for the market and the foundation for the release of the consumption. Market is the most rare resource. China has over 1.4 billion population with the per capita GDP over $13,000. We have a huge potential and broad base market and has a huge development opportunities. As the spending power gets enhanced and the upgrading of the consumers get accelerated, digital and green and other new types of economy have been developed both in their demand, and the service consumption in childcare and elder care have been developed. The new industries and new urbanization and upgrading in the energy conservation and carbon reduction have a huge space in investment. The basic public service, government subsidized housing have huge investment, and this will promote the release of the domestic demand and stimulate economic flow. Third, we will further deepen the reform and opening up, which will further release the dynamics. Reform and opening up is our source of the vitality and our secret in catching up with the world in great strides. The third plenary session of the 20th CPC Central Committee proposed over 300 reform measures. As these measures have been implemented, the reform in the key links and key areas have shown their effect, which would remove the deep-seated institutional barriers and play the role of market and continue to create the market-oriented, law-based, internationalized, first-rate business environment, promote the coordination between the efficient market and effective government, and unleash the productive forces. Fourth, the macro policies show its effect, which will promote the recovery of the economy. Last year, on September 26th, the meeting of the Political Bureau of the CPC have made a package of incremental policies, enhanced the public confidence and market vitality. We will, this year, seriously implement the guiding principles and will implement more impactful macro policies. to promote the stable and healthy development of economy. It should also be noted that we have very rich experience in regulation and adequate toolkits. This will promote the micro-regulation and will effectively respond to challenges. It should be noted that to realize this goal, it is not easy and it requires arduous efforts. In the next stage, it is important to act on the decisions and the plans, catch the opportunities, deepen reform comprehensively, expand high standard opening up, foster new quality productive forces, take solid steps to promote high quality development and to realize the goals and mark the foundation for the successful conclusion of 14th Five-Year Plan and good start for the 15th Five-Year Plan.
Last year, industrial output grew at a relatively high figure. This year, as we continue to boost industrialization, new quality productive forces, trade in consumers' products, high-end manufacturing has grown quite rapidly. The companies have better expectation, and industrial output generally have maintained quite rapid growth. First, the momentum has been steady. The localities have mobilized resources to provide underpinning for industrial output. In the first 2 months, the scale above the production of enterprises above the designated scale grew quite well. As you can see, it grew faster than the overall industrial growth. All these provide good underpinning for the steady improvement of industrial growth. So again, this is on the basis of a quite high figure from last year. So it shows that China's industry has great resilience for steady growth. Second, high-end and AI-empowered growth shows a clear trajectory of development. We are making better use of AI and other frontier technologies to promote industrial transformation. They have increasingly become a new growth engine. In the first 2 months, high-end manufacturing, or value added of such manufacturing, grew 9%, up 0.2 percentage points from last year. The robots, circuits, grew 27% and 9.6% respectively. And now application of AI is being more widely promoted in car manufacturing and other sectors, which has led to rapid growth in related sectors. In the first 2 months, we have seen high growth in a number of related sectors. In the first 2 months, new energy vehicles and the lithium batteries grew 47% and 37% respectively. Wind and solar power generation, double-digit growth. Fourth, the expectations of companies have steadily improved. This year, macro policies are more proactive. AI application achieved breakthrough, which has produced such positive expectation. PMI in February was 50.2%, up 1.1 percentage points. And the index of new retails in manufacturing was 51%, up 1.9 percentage points. Overall, industrial output has remained quite steady, and the momentum of new and positive development is quite clear. That said, there is still acute structural tensions in terms of supply and demand. Some prices in certain sectors are sluggish, and some businesses are not doing well. Going forward, we must continue to implement the measures to boost domestic demand across the board, promote greater integration between sci-tech and the industry, and work to improve the performance of companies. How do you see the real estate sector's development, and what are the highlights?
Thank you. In 2025, the market remains generally stable. Policies to stabilize the real estate market are taking effect. New house sales are stable, second-hand deals are active. Prices of housing in top cities are stabilized, and the momentum of stop dropping continues since Q4 last year. First, generally stable market deals. With improved and adjusted policies in the respect, people's demand for first homes and better housing are released. In the first 2 months, the year-on-year decrease of areas and sales of new commercial and residential properties have been narrowed respectively by 7.8 and 14.5 percentage points. In 40 major cities, the two figures are increased respectively by 1.3% and 7.1%. Second, house pricing is being stabilized. In 70 major cities, in February, prices of new commercial residential properties are increasing than last month. And from the prices of these properties in top cities, the year-on-year decrease has been narrowed by 0.4 percentage points. And in second-tier and third-tier cities, the figures are 0.3 and 0.1. And third, stable expectation in the market. In 70 major and middle-sized cities in February, we have a survey against real estate enterprises and agencies. Those who expect that prices of new commercial residential properties will be stable or rise account for 71.8%, 2.8 percentage point higher. Fourth, the real estate developers are better at operating the business. The sales of residential housing in first and second tier cities stopped dropping, making the enterprises better at withdrawal fund and improve their operations. In the first 2 months, the year-on-year decrease of investment in real estate development is 0.8 percentage point narrower. That of investment in residential houses, 1.3 percentage narrower. That of fund in place, 13.4 percentage narrower. So generally speaking, the market is stable, but we have to be aware of the pressure in the market. Next, we have to follow through the CPC Central Committee and the State Council's directives and make city-specific policies to lift or adjust restrictions renovate urban villages or dilapidated houses, tap into the potential of first homes and better housing, and build a system of multiplier supply and a better round system. Thank you.
The CPI in February was down year-on-year and month-on-month. What is the reason behind it, and how do you see the trajectory of the CPI? I know that prices are on the top of your minds. In terms of historical figures, the Spring Festival has a quite large impact on CPI in the first 2 months, as you know. In particular, given that Spring Festival comes at a different time between this year and the previous year, it would cause an even more notable impact or fluctuation in the CPI. This is because before the Spring Festival and during the Spring Festival, the demand is unleashed, which leads to higher prices. And as demand falls following the holiday, prices tend to go down. For instance, airlines, they sell tickets, and before the Spring Festival, the food, in addition to such transport costs, tend to go up. But after the festival, with reduced demand, the prices gradually fall. Spring Festival usually comes in January or February, but when it comes at a different month, between 2 years, it would lead to notable fluctuations in the CPI. This year, due to the influence of the Spring Festival, CPI was up 0.5% year-on-year in January. That's a higher growth margin than before. Whereas in February, due to Spring Festival coming in a different month, the CPI was down 0.7 percentage points, 0.7% year-on-year. So if you deduct the impact of the Spring Festival coming in a different month, then CPI in February is actually up 0.1% year-on-year. The prices of fruits, of vegetables going down, as well as reduced prices of car sales, also led to the CPI growing less in February. And also due to frozen weather in certain regions, prices of vegetables have grown quite a great deal. In February, though, the prices was down 12.6% year-on-year, which led to a downward trend of around 0.31 percentage points for the CPI. And cars, the prices for oil or fuel cars and new energy vehicles were down 5% and 6% respectively year-on-year, which has led to reduced CPI of around 0.16 percentage points. So all in all, the trend of CPI has not really changed. In terms of the structure, if you deduct some energy sector related commodities, then prices have grown 0.2% year-on-year. Retails for cultural and recreational products and small household appliances have been up around 1%, 1 to 1.5%. And household services up 2.6% year-on-year. Dining up 1.2%. So this shows a market, as it continues to become more vibrant, it has an influence on the changes in the prices. The economic development momentum is steady and market demand is expected to be boosted. As there are more channels to boost the revenue of households, and we have policies such as trade-ins of consumer products, we expect the prices to become improved in time. Thank you for your question. Indeed, with complex and changing international environment, the trade situation is closely followed. This year, world economic recovery has been sluggish, and there are more trade restricting measures and more challenges facing global trade growth. So given such complex external environment, and considering that we have fewer working days in the first 2 months of this year, our imports and exports have actually grown if you deduct these factors. In the first 2 months, goods was down 1.2% year-on-year if you deduct the factors. And imports and exports grew 1.7% overall. Mechanical and electrical products, among other key products, showed good exports. And overall, we have shown international competitiveness and resilience. First, in terms of our major trading partners, our trade with ASEAN and the U.S. continued to grow. In recent years, with the implementation of RCEP, our trade with ASEAN countries have maintained good development momentum. In the first 2 months, with ASEAN, imports and exports stood at, or grew 4% year-on-year. Despite more tariffs, our trade with the U.S. shows great complementarity, and trading goods continue to grow. In the first 2 months, our trade volume with the U.S. grew 3.5% year-on-year. In terms of market entities, the private businesses continue to have more imports and exports. In recent years, they have taken an active part in going global and are a major force in the growth of our trade. This year, faced with the complex and fluid international market, private businesses have proactively adjusted their production and explored new frontiers in growth of trade. And the figure for them was 2% growth year-on-year, which is better than the overall figure. Third, in terms of exports, mechanical and electrical products have done quite well. As we upgrade our industries, they have greater market competitiveness. Integrated circuits, cars, and other products have shown steady growth. In the first 2 months, the exports of electrical and mechanical products grew 5.4%, among which auto data processing equipments and their spare parts grew 11.7%. Integrated circuits grew 13.2%, and exports of cars 3.7%. Going forward, our trade shows good strength of having a large scale and sound foundation. We are the largest trader of goods and second largest trader of services. We have continued to diversify our trading relationships, and we are the main trading partner of over 150 countries. Our trade has broad room for further growth, and as we have a sound and well-established industrial system and good supporting capacity, goods made in China have become more recognized globally, and our businesses and foreign businesses and our business continue to take an active part in global division of labor. And new highlights such as green trade and digital trade keep emerging, which will provide good underpinning for our trade going forward. Even though the international situation is more complex and serious, the overall trend of win-win cooperation will not change. China's steadfast commitment to further opening up will not change. We will continue to develop our strengths and industrial system and provide good underpinning for the growth of our trade.
How would you comment the development of the manufacturing investment in the first 2 months, and what is the effect of the large-scale equipment upgrading policy? How would you see the manufacturing investment? Thank you. Manufacturing is an industry that has taken the attention from various sectors. As the manufacturer becomes more high-ended, intelligent and greener. The effect of the large-scale manufacturing upgrading has been shown. Investment has maintained a relatively fast growth, leveraging the whole investment. In the first 2 months, the investment in manufacturing increased by 9 percentage points year on year, maintaining a relatively high level. There are the following features. First, the investment structure gets optimized. Investment in the equipment manufacturing developed fast. As the manufacturing gets upgraded, the demands to the equipment products gets expanded, driving up the investment in this industry. In the first 2 months, the investment in the equipment manufacturing increased by 8.9% year on year, among which the railway, ship, aerospace, and other transport equipment manufacturing and the general purpose manufacturing investment increased by 37.3% and 21.6% respectively, all faster than the investment in the whole manufacturing industry. Second, the transformation and upgrading gets developed steadily, and the investment in the technological transformation has been accelerated. More efforts have been done in this area. Investment in tech innovation have maintained a high growth rate. In the first 2 months, the investment in this area increased by 10 percentage points year on year, 2.0 percentage points faster than last year. Third, the manufacturing gets high-ended. The high-tech manufacturing investment gets more investment. In the first 2 months, aerospace, vehicle, and other equipment manufacturing investment increased by 27.1% year on year. The computer and office device manufacturing investment increased by 31.6%. This year, the large-scale equipment upgrading gets more attention and promoted the production of manufacturing. In the first 2 months, the investment in the equipment and the tools purchase increased by 18% year on year, up by 2.3 percentage points, and the last whole year contributing 2.3% to the investment growth. We still have broad space in the manufacturing development and favorable conditions for the investment. First, the industrial upgrading gets accelerated. We are moving to a manufacturing powerhouse. Manufacturing becomes more intelligent, high-ended, and greener. We are promoting the new quality productive forces and the upgrading of traditional industry, development of the emerging industry, and the growth of future industry. All this requires investment. Second, the technological innovation achieves breakthroughs. In recent years, we have made breakthroughs in the AI, large models, humanoid, quantum computing, semiconductor. AI Plus and other innovative products and applications are going faster, driving up the demands of the related products and investment in the related industries. Third, the policies have played a bigger role in their support. The Central Economic Work Conference and the 2 sessions have made plans to the efficient investment and are work hard to promote the major strategies and the large-scale equipment upgrades and consumer goods trade-in and strengthen the facilitating factors. Moving ahead, we will implement the guiding principles of the sessions, actively promote the efficient investment and efficiency, play the role of the government and the role of the investment in enhancing the growth, investment, and demand. Next question. Could you preview China's economic performance in the first quarter? What is the effect of the policy in boosting the consumption? I also want to ask, how will the U.S. tariff influence China's economic growth?
Indeed, I understand that given the complex situation, you might be very concerned about the consumption. In the first 2 months, economic growth has been off to a good start.
Recently, even though the external environment becomes more complex and severe unilateralism and protectionism is on the rise, global monetary policy are divided, feeling the risk of volatility in global market. The domestic demand is weak. Some enterprises face difficulties in their operation and production. There are still some hidden risks, but we have an enormous market, complete industrial system, a wealth of manpower and talent, vast space for further growth through demand upgrades, structural improvements, and the shift to new growth drivers. The adopted and new policy continue to show its effect. The Q1 economy is expected to maintain a trend of overall stable performance and steady growth. Specifically, first, the economy continues its trend of recovery. In the first 2 months, it witnessed the stable growth of production, supply, consumption, and investment. The major economic indicators grew faster than the whole previous year, laying a sound foundation for the Q1 economy. In the first 2 months, the total value added of industrial enterprises above the designated size increased by 5.9%, up by 0.1 percentage point. The index of services production increased by 5.6%. Year-on-year, up by 0.4 percentage point. The total retail sales of consumer goods up by 4% faster than the last year. The investment in the fixed assets increased by 4.1%, up by 0.9 percentage point. Second, the domestic demand is expected to get improved. Recently, we have the plans to enhance and boost the consumption, and coordinated policy have been introduced to boost consumer spending and improve living standards. And the large-scale consumer goods trading programs and others, and the innovation diversified consumption scenarios have been developed, which will drive up the consumption. In February, the CCI is up by 0.9 points, recovering for 3 months in a row. In investment, more work has been done to stabilize investment, strengthen programs, funding, and other facilitating factors. Together with the increase in investment in civil investment and innovation, these will be conducive in driving up investment. In the first 2 months, the investment in infrastructure increased by 5.6%, up by 1.2 percentage point. The high investment in high-tech industries increased by 9.7%. Third, the macro policies continue to show its effect. Policies of the large-scale equipment upgrades and other major strategies have shown their effect. From the first 2 months, driven by these policies, the retail sale of the household appliance and audiovisual equipment above the designated size increased by the 2-digit, driven by the large-scale equipment upgrading. The investment in the purchase of equipment and tools increased by 18%. As the more proactive fiscal policy and appropriately accommodative monetary policy are implemented, the economy will achieve a steady growth. Fourth, confidence in the market expectation is improved. With the macro policies showing their effect, we see a sustained economic recovery, and the breakthroughs in high-tech, such as the large-scale model humanoid, driving up the public expectation. These 2 months saw a sustained recovery of the real estate market, and the growth of the trading volume and business volume in Shanghai and Shenzhen Stock Exchange. Market expectation is improved. The manufacturing PMI is increased noticeably. The non-manufacturing business activity index remains within the expansion range, which will promote the economic flow. Despite risks and challenges, China has solid foundation, various advantages, strong resilience, and huge potential, which will provide support and growth drive. And the coordinated policy will continue to show effect. Q1 economy will maintain overall stable growth and steady development. Next question.
This year's government work report
The main targets for this year in the government work report include surveyed urban unemployment rate of 5.5% and over 12 million new urban jobs. So how's the employment now? Thank you. Employment is a big deal for the people that everybody cares about. This year, relative departments have been working very hard to stabilize and expand employment, encourage market entities to add jobs and create better jobs. So the employment situation is generally stable. Based on our past experience, in January and February around the Spring Festival, labor market supply and demand will fluctuate, and the rate will show a seasonal rise before the Spring Festival, and after people get back to work, the rate will drop. So in this February, the rate nationwide was 5.4%, 0.2 percentage point higher than last month. So it's in a normal range. And in January and February, the average rate was 5.3%, basically unchanged compared with the same period last year. But on the other hand, we still have to work very hard to stabilize and expand employment. The current international situation is complex and grim, posing great challenge to the economic recovery and the employment market. This year, we will have 12.22 million fresh graduates, and we need over 30 million people lifted out of poverty to have jobs. And we also have to stabilize jobs for rural migrant workers in cities. So the government work report proposed that we have to redouble efforts to stabilize and expand employment, refine employment first policy to guarantee full and higher quality employment, and unleash supporting plans in key areas, have large-scale training programs to optimize the services of employment and starting up businesses. Next, as we expand our domestic demands and promote high-quality development and upgrade our traditional industries, as well as foster new industries and business models, and we will work very hard to maintain the general stabilization of employment.
During the two sessions,
sci-tech innovation is no doubt a highlight. Keywords include new quality product forces, AI plus low-altitude economy. So from the data in the first 2 months, how does sci-tech innovation drive the growth of new quality product forces? Thank you. New quality productive forces is surely a key word, and it is highly valued by the Central Committee of the CPC. And the departments are launching new efforts and measures that are taking effect. And we're making new grounds, like expanding digital economy and the green economy, and traditional industries are steadily transformed. So first, emerging industries are growing very fast. In the first 2 months, value added of high-tech manufacturing above designated size increased by 9.1%, 0.2 percentage point higher. And the domestic AI big model is a big surprise. AI Plus and other innovative products are accelerating, greatly changing the mode of production and boosting high-end manufacturing. In the first 2 months, yield of integrated circuit, wafer, industrial robot, and bullet train and civilian drones grew respectively by 19.6%, 27%, 64%, and 91.5%. Second, digital economy is more dynamic. Digital economy is an important cornerstone. In different industries, in the first 2 months, value added of digital production above designated size grew by 9.1%. And from different products in the first 2 months, yield of 3D printing devices and VR devices grew by 30.2% and 37.7%. 5G scale application is advancing. In the Spring Festival, 5G users access traffic increased by 35%. 60.9% of all mobile internet user access traffic. Third, green economy is a new driving force for new quality productive forces. In the first 2 months, the power generated from wind and solar energy in industries over designated size grew by 10.4% and 27.4% respectively. NEVs, Lion batteries for vehicles, carbon fiber and its composites grew by 47.7%, 35.4% and 51.5% respectively. Last, industries are steadily transformed and upgraded. Industries are going digital and intelligent, further boosting new quality productive forces. In the first 2 months, investment in technological transformation in manufacturing increased by 10%. And now we have over 30,000 basic smart factories, over 1,200 advanced smart factories, and 230 top-class smart factories, greatly empowering industrial upgrading. Next, we're going to make efforts in incentivizing traditional industries, fostering emerging industries, and planning for future-oriented industries. Thank you. Thank you very much.